In this lesson, we will discuss some tax return filing basics. So after completing this lesson, you will be able to verify that a taxpayer is required to file a tax return, and you will be able to recommend when a taxpayer should file a tax return, even if not required to. So not all individuals are required to file a tax return. To decide whether someone must file a tax return, we need to know the individual's age, we need to know their approximate gross income, and we need to know their filing status. Now, when we are determining how much approximate gross income a taxpayer has, that is going to include all the income received during the year in the form of money, goods, property, and services not exempt from tax, both earned and unearned income. So that's going to be most forms of income that we will cover in Unit 1, except for Social Security. Okay? You're not going to include Social Security in gross income unless the taxpayer is married filing separately and they lived with the spouse at any time during the year. There are a couple of other exceptions as to when you would include Social Security, and you can find those in the footnotes of the publication 4012. If you will open your publication 4012 to the Who Must File tab, we're going to determine who is legally required to file a return using the charts A, B, C, and D. So most of the time you will use chart A for most people who must file to determine if a taxpayer needs to file a return. Okay? So in order to use this chart, like I mentioned, you'll need to predetermine the taxpayer's filing status as well as an estimate of their gross income and their age. As you can see in Chart A, for most filing statuses, there are two different income thresholds to determine if a taxpayer needs to file a return or not. The first is for taxpayers under 65, and the second is for taxpayers over 65. Taxpayers who are over 65 are going to have a higher threshold. Now notice that the filing threshold amounts vary depending on filing status, and that married filing separately has a threshold equal to the exemption amount. Okay, so it's very low, and it's another reason why it is not beneficial to file as married filing separately. So for example, you may have a taxpayer who has $6,000 in wages, and they are under 65, and you determine that they are single. By following the chart, you can determine that their gross income is under the threshold amount, so they are not legally required to file a return. Okay. Now, they still may want to file a return, and we'll talk about situations when they should file here in just a moment. But first, let's talk about Chart B, which is for children and other dependents. You're going to refer to Chart B when you have children and other dependents who may be required to file a return, even though they are going to be claimed as dependents. So specifically, if a parent can claim a child as a dependent, the dependent may still need to file a return if they have earned income greater than a certain amount. Okay, so generally this is going to be less than the amount for single filers. In 2014, the amount was $6,100. So if a dependent had an amount greater than $6,100, they were required to file. But notice how this amount is much lower than the single threshold amount. Okay, so even though the dependent is single and they had less than the certain amount on Chart A for people who must file, they may reach a point by looking at Chart B that they still are going to be legally required to file a return. Chart C refers to other situations when you must file, and Chart D refers to who should file. Let's go ahead and look at Chart C first, other situations when you must file. So we might have a situation in which a taxpayer is under the threshold amount for their age, filing status, and approximate gross income, but there may still be other situations when they are required to file. For example, if a taxpayer owes special taxes, we'll talk about what some of those special taxes are later on in our trainings. If a taxpayer received health savings account distributions, they would be required to file a return. If a taxpayer has self-employment or business income earnings of at least $400, they are going to be required to file a return. If a taxpayer received an advanced premium tax credit to pay for health insurance, they would be required to file. Some taxpayers may not be required to file based on filing status, age, and gross income received during the year, but they should file a return. Okay, so let's talk about situations in which they should file. Any situation in which a taxpayer had income tax withheld from their pay. Okay, so they may have some or all of it refunded if they overpaid during the year, and they would only get that by filing a tax return. If they made estimated tax payments, again, they may have some or all of those estimated tax payments refunded if they overpaid. If they qualify for the Earned Income Credit, remember this important federal benefit is only available by filing a tax return. They may qualify for the Additional Child Tax Credit. A taxpayer may not have to file or owe taxes, but they still may qualify for this refundable credit if they have children. Or if they qualify for the American Opportunity Credit, taxpayers again may not have to file or owe taxes, but they may still qualify for this partially refundable education credit. And we'll talk about all these credits in a later training, but just note there are situations that will come up when a taxpayer is under that threshold, but they still should file a return because they're going to receive a refund. That concludes this lesson. You should now be able to verify that a taxpayer is required to file a tax return and recommend when a taxpayer should file a tax return even if not required to.